Welcome to Bears in Exile. Today is June 27th, and it is time for the market overview. We'll be looking at the Dow, SPX, VIX, TNA, XOI, UUP, FXE, GLD, and SLV. And we'll start off with the Dow. Actually, we'll start off with the SPX. On the last video, we were talking about how we were disappointed about having the massive hammer followed by perfect for a rally, followed by a big ugly red candle, and then today we had a nice big green candle. Wouldn't you know it, just perfect timing, right? Well, that's fine, and because whichever way it wants to go, we can do well. You'll see that we do have an uptick today. However, the target was reached intraday, so there's nothing to be said from that. So there's nothing to correct at the moment. The long-term moving averages continue to expand, creating a stronger bar. However, it is not strong yet. We also do not have crossover yet on the short-term moving averages, which we need to see some crossover to tell us that it's going to be headed on its way up. We don't have anything like that. We have the 200-day moving average. It was tagged twice. They were able to avoid tagging it for a third time, thus far anyway. Secondaries are mixed. RSI barely getting to the halfway point. Stochastic still clicking down, and MACD slightly ticking up, and we have an uptick on the MACD histogram. So it could go either way. We're essentially got another day of waiting for it to decide to do whatever it is that it wants to do. So certainly this is encouraging that the bulls still have hope. Had we gone through the 200, it would have been massively bad. So they have extended this decision process for another day. And tonight we will get our NDE on the first in a series of votes in Greece, and that is going to determine what the market is going to do in the short to intermediate time period. So very, very interesting. If they vote no, we'll probably have a really bad day tomorrow. If they vote yes, we could have a good day, or if that was being priced in today, then we could still have a neutral, neutral positive, neutral negative day tomorrow. So all kinds of things to be waiting for. On the Dow, more of the same. It did have more room in between itself and the 200-day moving average. Just like the SPX, we had an uptick. It was met intraday, meaning that there's nothing to target. The bar is even weaker than the SPX, so if it does go up, it'll have even less trouble getting above it. And secondaries are identical to SPX. Now, if we look at the VIX, this is very interesting. We had a big up day on the Dow and the S&P, and the VIX started off higher. And this isn't exactly a great match for what happened in the Dow and the SPX. That it started out higher, this candle should have been larger. So really, even though it went down, it's a higher candle than the previous one, so that doesn't really jibe. And you'll notice on the VIX, the moving averages are still pointing up, short-term moving averages, and the bar is trying to strengthen, but it is very weak at this moment. And we don't need this 200-day moving average anymore, so I'll get rid of it. So we don't have a downtick on the VIX yet. Maybe we'll get that tomorrow. Certainly if the news is good and the market perceives it as good, we will get it. Maybe even be strong enough to take us down to the bar in one day, but we'll have to wait and see. XOI, essentially spinning top. It, indecision candle had a kind of a rough day, but you can see that the moving averages are still pointing down. Long-term moving averages still pointing down. We don't have any upticks or anything, so there isn't too much to see there. Secondaries are essentially negative, so perhaps we will see more downside on oil. And you can interpret that as good, or you can interpret it as bad. And two schools of thought. And whichever one you believe in is the one that you believe in. TNA, we have not quite a hammer, but still not a bad candle at all. We are having crossover of the short-term moving averages. Whether or not we can get full separation prior to entering the bar remains to be seen. The bar is not strong, but it is completely intact, and it does have separation. On the secondaries, you can see that the MACD histogram is ticking up, MACD is ticking up, everything is ticking up. So TNA does look, decent at this moment. But it will all depend upon the crossover and separation of the short-term moving averages, which of course are dependent upon the NDE overnight, which pretty much everything is. UUP. Very, very interesting. We have the bearish bar taking damage. We have an ever so slight downtick. It really looks pretty neutral to me. Now, what this does have going for it is the candle engulfs previous candle, bearish. So, according to this, the dollar should have, should go down, which would be good for markets. And certainly the bar is still bearish, which should lend support in sucking it down. We're also close to the upper Bollinger Band. Beyond that, our secondaries are all still ticking up. So we did have a very slight downtick on the MACD histogram, but all the secondaries are still ticking up. They need to roll over and start going down to confirm a good down move is underway, and that wouldn't be very difficult at all at this point. If we look for validation with the FXE, we can see that we do have a engulfing of the previous candle. It is bullish, and the bar, although heavily damaged, is still there mostly. However, the secondaries are ticking down still, and we have a slight uptick in the MACD histogram. So, very likely that it could go up, NDE permitting, and just like the dollar, these will need to tick up to, give weight to the move. And GLD had an ugly day, indecision candle. Still have the massively bullish bar. We do have, we haven't completely entered the bar yet, so we can't say, complete separation prior to entering the bar. However, we can see that it has already exited the bar, so it has already put the hurt on the bar. Secondaries are clicking down, and which is very surprising. I mean, if the dollar goes down, gold should go up. I reason that fear as well as the dollar brings gold up, and perhaps if they're selling that the fear in Europe is over, maybe that'll create a weakened demand for gold, and that's my read upon it. But Europe's a mess. I don't think that they can keep that genie in the bottle for too long. But that is my guess. So we'll have to wait and see exactly what happens here. We did not get a warning really of a downtick. The moving averages were so close together here that it really was not much of a warning about gold. So that is unfortunate. And SLV, this has been our least favorite for a while, essentially double flatline, and now it appears to have chose that it wants to go down. We do have separation of the short-term moving averages. Long-term moving averages remain a flat line. All secondaries are ticking down. And that's going to be it for tonight. Everything is dependent upon the news and the reaction of the news, whatever it decides to be tomorrow. So everything is going to follow that. And that's just it. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.